Hey everyone, welcome back to another market closing live stream. We've got earnings coming out today. We've got Dave and Buster's, Affirm. These are going to be two that we're going to be watching pretty closely. There are quite a few other companies coming out with earnings as well, but none that I as highly recognize. So Dave and Buster's and Affirm will be very, very big. Obviously, we've got FinTech. Affirm just struck a partnership with Amazon to be their buy now, pay later service provider. That's a big, big move for a firm. That will not be reflected in these earnings, though I anticipate in the earnings call, we're going to have a lot of color and detail added to this partnership in terms of when it'll be implemented. When can we actually start to expect earnings coming from this? That is like actual profit coming from this partnership. And so we've got a lot of high hopes and expectations for Affirm. Now, I've got a big position in Affirm, almost as big as I have in Hippo. Kind of funny to say that. But anyway, yeah, I mean, I'm excited to see what happens here with the earnings. I do believe that there could be some potential downside risk, mostly because there's a lot of excitement around Affirm's partnership with Amazon, but downside risk could be present in that we're not going to be seeing any earnings, and it could take longer to get buy now, pay later incorporated into Amazon. And then once it's incorporated into Amazon, there's not just a matter of like having the button there. People have to get educated on what the heck it is, right? So these things tend to take a little longer. But folks have to, Amazon's probably going to have some kind of advertising strategy for, hey, make payments in over X period of time, or maybe there'll be like a button under the price, like, hey, buy the new Amazon Fire TV for $469. Or, it could be as simple in theory as make, I don't know, 8 payments or 10 payments for $46 or whatever. So it will be interesting to see exactly what kind of color we get from the Affirm earnings call. We might get none. That would be the big downside, right? You get like no color at all from the earnings call with Affirm on how their partnership's going to go with Amazon. Then it'd be like, yeah, I don't think the Affirm stock's going to do too well. So earnings are crazy. Playing earnings is very, very risky. It's Russian roulette. It's not Russian roulette. Well, I mean, I guess you could call it that with how dangerous it is. I mean, it's like roulette, the wheel game, not the revolver game, where you're either black or red, which is actually very true because when stocks are red, they're red. When stocks are up, they're considered to be in the black, even though technically our platforms say green. I don't know. Little trivia, I suppose. Anyway, let's go take a look at some of the things going on in the stock market right now. Dave and Buster's. Oh, that's going to be another one. We'll look at Dave and Buster's. Actually, let's just start with Dave and Buster's right now. I'm a little curious to see what's going to happen with Dave and Buster's here. So we were down earlier in the day. Sorry, yeah, this is the minute. Wow, we've had quite a movement here. Look at that. We went from 33.80 to 36.10. Now sitting at 35.13 on Dave and Buster's. We've slightly flattened out and recovered from some of the low levels of about 31. So we're about $5 over that right now. But we've been on this pretty rough trajectory here. I think it's worth noting that, I was last there on a Wednesday, and they have their discounted games Wednesday. So it's always busy on Wednesday. But let's go ahead and take a look at search trends for Dave & Buster's. Let's see. Do a quick little 5-year search trend on Dave & Buster's. So we are seeing a recovery, and what we're getting right now is going to be Q2 earnings. So we're going to see this pop here from March. We're really going to see April, May, and June here. April, May, June. These are going to be, and then we see a slowdown in Dave & Buster's searches actually start in August, which is right around back to school time. And if we compare this May, June, July to May, June, July of last year, we're literally locked down. I personally think that could be a very interesting, we could have a very interesting earning situation here for Dave and Buster's. Let's see here. And okay. Computer's lagging a little bit. Okay, there we go. So I'm going to take a look at this here. So this is Dave & Buster's. Right now we're sitting fractionally up at 35.19. You've got option contracts here expiring tomorrow. Let's say you go out to the 17th, and you go look for a call. You go look at get an in the money call here on Dave & Buster's in case you get a miss. What do you have to pay? $2 for a 35. That's basically at the money right here. you do have a lot of open interest. So let's see here. You know, I'm gonna buy some of these. This is gonna be my first foray into recovery here in a while. We're gonna go 125 on these 1 week calls on Dave and Buster's. Super high risk. Let's see if those actually get filled. Super high risk there on Dave and Buster's. But and I hate playing earnings, so I consider this a little bit more of just like boredom plays. It's not. I can't. I mean, I think I'm like 10% more likely to be right than wrong, but not much. And that's the nature of doing calls. So I also have a put out. I sent that out to course members on a different stock, which I'll reveal that a little bit later. As y'all already know, I post all my trades, longs, shorts, buys, sells, crypto, everything in the Stocks and Psychology of Money group, which I'm doing right now. Click on plan. One sec. Yeah. Nice. Okay. Okay. Again, very risky. Playing earnings is mostly just gambling. Okay. At least I'm transparent about it. So anyway, so I've got two games. Like this is gonna be a fun earnings day because I usually do not play earnings, and now we've got two going. So I guess I may as well change the title of the video here. Just and my two YOLOs. Two YOLOs. There we go. All right, we'll see what happens. It'll be fun. I'll probably close both of my option contracts tomorrow, even if they both lost. It'll be entertaining. So, all right, let's take a look at the broader market to see what the heck is going on here. We've got Clever Leaf sitting at 553 to the downside. Boston Beer actually recovered a substantial amount of its losses here intraday. We've got hold on a second here. Kathy Wood's ARK cuts Chinese positions dramatically. Oh wow, Financial Times dramatically cutting her exposure. Wow. Okay. What? Wait a second. What is this? Hold on. Here's something on AMC. Is this true on AMC? Banking sources tell Fox Business Management change at AMC TV. Oh, this is the TV networks. Oh, okay, not the theaters. Okay, never mind. All right. So let's see what else. Yeah, we'll talk about GME as well in just a second because it has had some incredible recovery here. Okay, here we go. So let's look at GME, and then we'll look at some of these other sticks here. So the fact that GME basically went break even today is really incredible. Like, great job, GameStop, because GameStop was negative 10% and just flew straight up. This is really exciting. Like, good job. Good job, GameStop. Super exciting to see that. We have Mind Medicine down 2.26%. This one's been kind of trending down. I've kind of been keeping an eye on this. Mostly because I potentially want to make a purchase on Mind Medicine, but I haven't gotten into any of it yet. So definitely keeping an eye on it, though. Let's see here. Big news from the White House. Yeah, the president will announce that all employers with 100 or more employees will be required to mandate vaccines or require testing at least once a week. Ooh, that's a big announcement there. Let's see. Yeah, that's a big shift there. I'm pretty sure Biden in the past has suggested he didn't want to have sort of blanket vaccine mandates, and that's almost what that is. Okay, what else we have here? So we have, let's see, Matterport. Matterport up 12.7% today. Really incredible. We do see that Matterport tends to do this sort of rubber band back and forth between 14 and 18. We're seeing that right now. We got a big move here on Peloton, up 10%. I had a leftover shares of Peloton this morning, and I'm like, yep, ringing that bell. Thank you very much. Some folks are wondering why I shifted my stance on Peloton when I originally sold somewhere around 113, 114, and it's specifically because of the change and the inflection point in a lot of the data that we're getting, from availability of bikes to pricing of bikes to search trends to website traffic to quarter over quarter declines. Now, summers can sometimes be a little bit of a weaker quarter than what you might expect around, let's say, Q1, which is when you would have a big old sort of fitness boom usually, right? The January New Year's resis kind of boom, the holiday boom of Christmas and other holidays. But I've been more interested in some other opportunities, specifically like Hippo, just kicking butt. It will not surprise me to see this over $7 soon. We've got let's see here. Lulu did amazing on earnings yesterday. Gevo really blasted off from our morning live stream here. We were watching this since it was up only about 6% in the day. It opened up about 6%, and it just really took off. And now remember, Gevo has run to $15 before under momentum, so it really has upside potential for momentum movement. This is not a fundamental move, in my opinion. This is very much momentum. Support.com SPRT is another one that has just been absolutely crushing it in terms of the momentum game. Though you got to be careful, because if you got caught too late, take a look at the disaster you could have gotten caught with, right? This thing ran up to about $60 and has been bleeding, so got to be a little careful here. So Hippo, Root, really the insurance companies moving here. Lucid back up after yesterday's disaster. Affirm actually moving up a little bit more into the close here. Went up from about 4.3% to about 5% right now, building in a lot of cushion here in the event of a miss on Affirm. I've got about 5,000 shares of Affirm. I've got options contracts out on Affirm as well. So I'm really burning the candle at both ends on Affirm. So we'll see what happens. Cardano, 252. Delta Airlines up 3.9 today. A lot of really recovery from the disaster that we had yesterday. I'm surprised with how much green we're seeing right now, how some of the indices are still down. Let's pull these up here. Yeah, see, most of the indices down. Dow Jones down a third, S&P down a third, NASDAQ down 0.7. Russell 2000 and small caps and recoveries doing well here, up about 0.5%. And you see that here with Macy's, Dave & Buster's, some of these other stocks, the airlines, Delta Airlines doing well. Robinhood coming back a bit. Robinhood up about 3%, sitting at 41. AMC went green today towards the end of the day here as well. Very nice. So let's see here. $9 still pushing AMC. Well, hey, AMC's kicking butt right now, especially since it came. I mean, we really had a 5 or 6% swing here intraday, which is great. Short interest, we probably should do an update on short interest on both of them. So we might do that here. I'll pull that up. We've got 10 minutes to the closing bell. U.S. sues Texas to block state's abortion law. Well, that'll be interesting. Justice Department suing to see if they can block the Texas abortion law, which is kind of interesting. I mean, how could you pull that off if the Supreme Court said they won't block it? I mean, but then again, that was just in terms of a preliminary injunction before hearing arguments. So maybe this is their way of trying to get that case elevated and speed. So terminal coming up so we can get a little bit of short interest data. We'll also use Ortex here just to get an update on some of the short interest positions that we got going on. Yeah, let's look at Palantir as well. That'll be interesting in terms of short positions. Palantir. Oopsies. There we go. Palantir sitting at negligible short interest here. Virtually nothing, only 5.5% utilization. Essentially not shorted. We've got the same thing as, let's jump instead here to AMC. Let's take a peek at AMC. So AMC, we're still at 91.7% utilization with a current 18.99% short interest. A little higher than what we've been used to. Let's go ahead and grab estimated short interest here. That's going to be this purple line here. And so you could see this slight uptrend we've really had since June in short interest. Yeah, let's see. And then, of course, volume bars right here, the light blue. So we could see this incredible run that we had here at the end of May, which obviously came after this. This was our second big run here after the GME run. That's when short interest declined. This was, in my opinion, indicative of at least one squeeze moment. This is not to say that it's like the squeeze, right? It's just it was a squeeze moment that we had here. And short interest has slowly been stacking up again. Just nice to see. That's generally bullish signal for those investing in AMC. GameStop did very well on recovery today, sitting at 12.53% short, only 34% utilization. And we grab the estimated short interest. Let's go ahead and get rid of some of these others. GME price, just so we can see this a little better here. That didn't help us at all. Yeah, let's zoom in a little more. Nope. There we go. Where's my bar? There we go. That's what I wanted to do. Okay, perfect. So we've got June, July here, stable short interest, but a decline really in short interest here recently. At least in the estimated short interest, substantial decline here recently. So okay, that's so you've got more of a climb at AMC than you do at GME right now in terms of the short interest. Let's see what other opportunities we might have. We've got 7 minutes to the close. Oh, I was also going to look at the term. Yeah, give me 1 sec. Grab this so we can compare, because remember, estimated short interest data is something that different companies calculate in different ways. So I usually like looking for an inflection point, where different companies have inflections heading in the same direction. So I'll go ahead and pull this up. Just take a second here. Okay. Here we go. Okay. So the first one I'll just drop in here will be AMC, and then we'll drop in GME, and I think we're going to look at Palantir in here too. You think now's the time for Mind Medicine? Yeah, let's see what we got here. So we drop in a GME here, and we have, we're sitting at, 10.58% on GME. That's a little less than Ortex's. AMC, Peloton launches private label apparel brand. Yeah, but they've already, we knew this. They were 17.79% on AMC. We knew this already for a while.
Or Peloton?
Peloton.
Peloton, well, yeah, obviously want to branch in that direction. I mean, I don't know if it's worth, $3 billion in additional market cap, the present value of the apparel line that Peloton is now launching. I don't know about that. It would seem to me, look, maybe you've noticed people who are big into Peloton like to share the fact that they're big into Peloton.
Right? It shows you're a member of the Peloton club if you wear Peloton apparel.
Well, I'm big into Peloton, but I wouldn't buy any of that.
No, but you don't. But there are those people.
Haven't tried it yet.
There are those people who share the screenshots of their ranks. And
I haven't seen what they're going to produce, but I have a feeling it will be more of that overly tight stuff, which I'm also not into. So I don't think I'm going to be embracing it. I do like the bike, though.
But look, Lulu is, I mean, they keep showing that they have room to go and that they maintain their premium brand and that they can get the pricing. And I once looked, at the density of Lululemon physical stores in Canada versus the U.S. per capita. By that measure, they could double U.S. stores to match the density that they have in Canada. Nobody says they're going to do that, but they actually would seem to have the ability.
That's interesting, although I wonder if it just makes me curious if that's because of potential differences in weather in terms of density of stores in Canada versus here. Okay. Palantir, we have 3.58%. On Palantir. Yeah, Palantir's always been pretty low. In fact, it used to be like 5 or 6%. We've really seen that rotate to the downside. Oh, let's see what they say about Affirm.
On revenues of $220 million for the quarter, those losses are expected to continue into 2022. The one big thing to be watching, as you just mentioned, will be any additional news on the partnership that Affirm and Amazon announced just about 2 weeks ago. The buy now, pay later option is available to certain U.S. customers with a broader rollout in the months to come. The partnership allows Amazon customers split purchases above $50 into smaller monthly payments, and it did send Affirm shares soaring. The buy now, pay later deals keep coming. PayPal announced just yesterday its acquisition of Paydi, and last month Square said it would buy Afterpay. Affirm shares up about 5%. Back over to you guys.
Thank you
Kate,
very much, Kate.
Oh, sorry.
It's okay, Will. Sorry, thanks very much, Kate. Anastasia.
Yeah, that's exactly how we started. That's exactly how we started this live stream, saying it's all going to come down to that conference call, in my opinion. So I wouldn't be surprised if we get some tentative news after the bell on reaction, on a miss or beat or whatever. The earnings call could totally turn after hours upside down. I mean, we could be green the first 30 minutes of after hours, get the conference call, hear nothing about Amazon, we could plummet. We could have a miss, go red, get the conference call, hear nothing about Amazon, we could plummet more. There's a lot that could happen here, a lot riding on this for a firm. And really, all they have to do is sell a little bit of hopium. But if they don't give that hopium, if they don't provide those details because they're muzzled by Amazon or whatever, it's going to be a little bit of a oopsie doopsie. So we've got, what do we got? 37.6% on Workhorse. Arcimoto, we are at 33.72%. Now, keep in mind, we do not have as much, what's it called? As much of a movement right now in the momentum stocks around just short interest stocks. Although let's check with Gevo here. Okay, and Gevo is 16.05%. Hey, it's got some short interest, worth noting. So you could have, who knows, you could always have a little bit of a squeeze come out of that. But I just haven't seen short interest be that big since about May, June, July. Like Workhorse was fun. It used to be fun and easy. You just look for the high short interest stocks, buy those, and then they ran. But that only lasted for about a month. Now it's a lot harder. Yeah, look at Redfin drop here. Just dropping like a rock. 48.51. Let's go to the day chart on Redfin here. I have not added anything to Redfin yet. And it's one of my favorite stocks. I just have not been adding in this dip. I'm really waiting for a reason for why it's falling, and then for me to try to understand what it would take to inflect upwards. That's what I'm waiting for. Look at Hippo. It's the hungry Hippo running another 9.5% today. Oh my gosh. This is just crazy. This one that we bought on Friday, it sent out an alert to everyone in Stocks Psychology Money. This one is right now. Where's the darn thing? Okay, hold on. I'll find it. Affirm. Oh, Hippo. Here it is. Oh my gosh. Those shares right now, the Hippo shares, are up 200K. I do have a covered call against it, and that's down 22K in market value, but that's until October 15th. So I won't necessarily realize that negative 22K. Instead, I'll keep $75,000 as a credit as long as it trades under $7.50 by October 15th. But honestly, at this rate, it could zoom past $7.50. I could get called out. It's been on a tear. It's super exciting. And I've got a big position there. So anyway, we got 10 seconds to the closing bell, and then we got Affirm and Dave & Buster's. I got 2 YOLOs on those. Here we go.
So part of that late session slide, as is the Russell, holding on to gains, but only 5 basis points, as Mike said, well off.
All right, Dow Jones down 0.43%, S&P down 0.48%, NASDAQ down 0.27%. Russell's about to go negative. Oh my gosh. What happened? What happened? Russell's only up 0.1. It's almost like we crashed into the close there. That is so weird. The Russell was up like 0.5% 15 minutes ago, and it just gave that up on the index. It's the only one that's up a fraction. Okay. Well, let's see here. We've got, oh my gosh, options for Affirm imply a 17.1% movement. And let's see here on, I don't have an implied. Do I have an implied? No. Okay, let me try to get estimates here. I'm so excited to see what happens with Dave & Buster's and Affirm. Okay, let's see here. Earnings estimates and Affirm. These earnings are both expected to come out at 405 and 405. Yep, both of them at 405. So, and DraftKings CEO is coming up on CNBC. That could be interesting. So, earnings and estimates. Keep in mind, we've got worth mentioning. Okay, worth mentioning here that you can get up to $70 totally for free with Public. Go to metkevin.com/public to get up to $70 totally for free. No payment for order flow, and they don't buy or sell your information. Stocks fall, and my 2 stock YOLO. Okay, there we go. So earnings estimates. So we got earnings estimates for Affirm, Dave & Buster's. Earnings are not out yet. We do have a big expected move in both of them here. We are expecting, do I have a consensus here? Q2. We have a consensus EPS adjusted of 0.57 for Dave & Buster's. That would be profitable. Revenue of 358 is the consensus. And we have revenue of 226 at Affirm with a loss of about 37.3% or cents rather on Affirm. So we'll see what I'm going to write that down. Let me write that down because it'll be a little easier. So Affirm, we're looking for a beat of 226 mil with EPS and EPS adjusted to be negative 30.4 cents and 37.3 cents on non-adjusted. And then Dave & Buster's, we've got revenue expectations again of 358 with EPS and EPSA of 55.1 cents and 57 cents. Okay, so I've written those down to have the best, quickest reaction on these. We are waiting for earnings on both of those right now. Let's go ahead and listen into CNBC for a moment as I wait for those.
It could be something out of left field. How do you possibly prepare for that?
I think, the S&P has been a great place to be. And I would stick with the S&P. If you're feeling bullish, maybe buy 2x the S&P. I do have some names that we think are interesting. Toll Brothers, we think is very
Toll Brothers, like everything real estate's got. Is the stream blurry? Okay, hold on a sec. Hold on. Let me refresh. It's going to disappear for a second. Stand by for 1 second. Okay. I can fix that, I think. There you go. Is that better? Let me know if that's better. Okay, earnings. 1 minute. 1 minute to go. Let's go. Let's see what Dave & Buster's really quick and Affirm we're doing right before. Affirm. Oh, you know what we should do? Can I put them up on a split screen? That would be cool. Let's see. Charts. Let's go 2 charts. Affirm. Play. Okay. 1 minute. Some big volatility here on Dave & Buster's. And let's make sure we have them. Let's see what happens here. And Affirm at the 1 minute. Okay. Let's see what happens. Both of them went up, but we don't have earnings yet. Okay, so both of them went up afterwards. Let's see what happens. Dave & Buster's and Affirm. I'm waiting. Okay, they should be out right now. Here we go. Dave & Buster's comes in. Oh, big beat on Dave & Buster's. EPS of $1.07. Big beat. 377 on top line. That's a beat on the top line. The bottom line, double the estimate. The estimate was 57 cents. We came in at $1.07. Big beat. Affirm comes in with a loss per share of 48 cents. That's worse than expected. Worse than expected on loss per share. Revenue does come in higher than expected, though. So you got a revenue beat of 261.8, but you got a bigger loss than expected. So a beat on the top line, but a miss on the bottom line for Affirm. Dave & Buster's comes out with a double beat here and a really, really big move on the bottom line here. It right now looks like, let's see, Dave & Buster's. I mean, I got green candles here on both of them. It looks like Affirm briefly shot up to 98, but now Affirm's slipping, while at this Affirm's dropping like a rock now that earnings came out. Oh, Affirm's dropping. Here it goes. Affirm's dropping hard, and Dave & Buster's is going up. Oh, snap. Now, I don't know if y'all gonna believe this, okay? But I bought a call on Dave & Buster's, and I bought a put on Affirm right before this. Now, I still think that a firm could run, and that's a dangerous thing for my put. There's going to be a lot of flexibility over this next period of time here, but the call is definitely going to be printing here on Dave & Buster's. This is a very, very good move to the bottom line. I put $25,000 onto a 1 week YOLO on Dave & Buster's. That is printing tendies right now with that aftermarket. We've got red here on a firm. I have a $30,000 1 week put on a firm. And right now that is it's still green in after hours. So so whatever I'm gaining here right now, I'm probably either flat or negative on a firm slightly. I think I'm about probably 50 cents off the pricing over here. But I'm surprised right now we're getting green on really both of these here. But that's okay. One will offset the other in this case. We'll see what happens. This is a big move here, though, Dave & Buster's. And a firm had a little heart attack there, but look at it. Now it's actually up 6%, which is good for the shares I have, not for that option contract. So let's see what we got here. This is, I'm going to go back here to see what other details we're getting. Why is a firm? Okay, so Dave & Buster's, awesome. So what happened with a firm? Again, a firm beat on rev, but their bottom line missed. They came in with a loss per share of 48 cents. We were expecting a loss of 37.3. So slightly larger loss than expected. Dave & Buster's is really, though, the one that killed it here. Second quarter reports. I'm going to go ahead and pull these up here. Second quarter, Dave & Buster's. Let's go ahead and look at these, and then we'll look at a firm and see what they say about the Amazon partnership, too. That's going to be the big deal as people go through this. So Dave & Buster's, an owner and operator of entertainment and dining venues today announced revenue. Okay, highlights. So let's see, revenues totaled $377.6 million compared with $50.8 million in the second quarter of 2020. We obviously knew year over year would be a complete disaster. So that's good. Last year was a disaster, that is. Launched new menu, completed rollout of mobile web. I prefer placing my order with the people, but it works. You like order through and pay through your phone and stuff. It helps them reduce employee costs, which I think is possibly why some of their margin moved up here. In fact, let's go ahead and look at their sheet quickly. Oh, wait, hold on. What was this about 2025? Long-term debt at $550 million, consisting of 7.625. That's actually not horrible, expiring in 2025. It's not a short term. And 7.625 isn't the nosebleed 10 to 12% that we've seen previously. Although you can have redemptions here to stocks, so that could lead to some dilution. Okay, let's go down here. I want to look at their charts really quick, and then we'll look at a firm's. So looking at a firm, see, unlike, what's it called? Oh, well, this is over a 6-month period. Okay, good. So assets, hold on a second here. Liabilities, still par with assets and liabilities here. That's interesting. Oh, wait, that's assets and stockholder. No. Where's just liabilities? Current liabilities of $308 million, long-term liabilities. Lease liabilities are a big one for them. Okay, so, I mean, like Aaron mentioned yesterday, you would throw this into, oh, a firm ran? Okay, well, that contract lost lots of money then. At least at least Dave & Buster's made money. So then you've got, let me see here. Cash on hand. We'll look at a firm in just a sec. Okay, I want to see G&A. Okay, G&A here at 18 mil versus 15 last year. Operating costs, operating payroll. These are the expensive things. Operating payroll. They have a lot of money going to labor, but it's actually much less than what we've had previously. Yeah, take a look at last year. Food and beverage revenues and amusement total revenues. Cost of food and beverage. Cost of food and beverage has gone down, but the payrolls for Dave & Buster's, this is interesting. They actually have a substantially lower set of payroll, but that could be because their revenues were so low. Yeah, that would make sense that their revenues were so low. So that's a little harder to compare. Okay, so what's happening with a firm? Let's look at a firm and let's go into, what's this earnings supplement? Let's take a look at this document here, because obviously something's pushing this. Yeah, I really wanted to buy at a discount as well. It does not look like I'm going to be buying at a discount on a firm. So while my Dave & Buster's option did really well, my firm one did not. That's okay. I own a ton of shares of a firm, so it's fine with me. Okay, let's see here. Affirm transactions, interest bearing. Okay, do we have anything? Let's download this and see if I can get anything on Amazon mentioned in here. That's gonna be big. Let's listen to CNBC while I download this really quick.
Customer and partnership, but
Oh my gosh, Affirm just holy smokes, it's killing it. Wow.
Acceleration in adoption. Everyone's decided that it really does create this relationship between merchants directly having a connection with their customer, right? Because the merchants kind of endorse this program, the kind of installment plan. It kind of cuts some of the credit issuers out of the equation, and it pressures lower fees all around. So customers like it. The problem, if there becomes a problem, is when consumers aren't so flush, you're worried about consumer credit, and you have not made the huge.
Here we go. So in August, the company announced a partnership with Amazon, split the costs of $50 or more into hidden payments. Amazon and Affirm are testing with select customers now, and in the coming months, a plan to make. Okay, this is good. This is actually really good news. Plan to make Affirm more broadly available to customers. Very, very, very good. That's great. Let's see. Company has not included estimates of the potential contributions to gross merchandise volume or revenue from the partnership with Amazon, which is currently being tested. The company plans to provide additional detail on the financial impact in subsequent quarters. This is what I expected. And honestly, I expected that to be not good news for Affirm, especially since their EPS missed larger than expected. So I was right about Dave & Buster's, and I was wrong about Affirm, because you got an explosion here. That's insane. Look at that. Oh my gosh, Affirm just absolutely crushed it. That's really good for the shares. Not good at all for the option. Let's see. And Dave & Buster's settling down a little bit on its excitement. Both of them up, but Dave & Buster's only up 5%. So that's not so good. That's not going to be much of a balancing out there. But good job for Affirm. That'll be fine for the shares. Was really hoping for a buy the dip, honestly, on Affirm. Didn't happen. That happens. That happens when you play earnings. Is it blurry again? If it's blurry again, I could refresh. Hold on. Okay. Hold on. Give me a sec. 1 sec. I want to look into more of this Affirm here. I'm now clear. There we go. Okay. How's that? Perfect. Oh, I always refresh once it's clear. That's funny. Well. Okay. So, yeah. Hey, look. Really, look. I got screwed on my option for Affirm, but I got a ton of shares, so it's okay. I'm going to make some money on the Dave & Buster's option. So hopefully that'll make up for a lot of the pain that Affirm just gave me on that YOLO option. So I had one win, one loss. Loss right now is at least tentatively a little bit bigger than the win, but that's okay. That's what happens when you play earnings. At least it wasn't a double loss. Hey, it's like playing roulette, right? So that, like I say. But anyway, this is really good though for the shares of Affirm that I have. So I've got a ton of shares of Affirm. I have Affirm. I am at, oh yeah, okay. Yeah, we got 5,000 shares of Affirm. We are at, let's see here. Okay, there we go. $536,000 right now in Affirm. That's nuts. That is a very nice boost here to my original cost basis. So really good. I mean, like, this makes me more money with the shares that I have than I lost on my contract, but it was a little hedge. I had to put contract on the firm just for a week. $29,000 is what it cost me, but 17% on the shares, 15%, 1.15 times the whatever, the 480,000 or whatever I had before it went up. Yeah, that's like 70 grand. So it's okay. This is still a big win. That's fine. Hedge not needed. We'll dump it tomorrow. or hold the hedge for another day. because that's another thing you could do. See, I bought a put today on a firm because I thought it was going to plummet. And I bought a call on Dave & Buster's because I thought it was going to skyrocket. I was right about Dave & Buster's. I was wrong with the option about a firm. Now, I could dump my put tomorrow, but I'm going to get destroyed. It's possible that I might hold the put until Monday, because if I hold it until Monday, maybe a firm's euphoria will kind of settle down a little bit. Now, this is also after hours excitement. So depending on what happens with the earnings call, it's possible that you could end up seeing this pullback. Maybe it only opens up 8 or 10% tomorrow. Doesn't matter either way because I got a ton of shares and the contract. So either way it goes, it'll be fine. Dave & Buster's now up 7%. We'll see if that holds. So we'll see where the cookie crumbles in the morning. But very, very good. I did buy a little bit of end phase as well earlier today. I sent out an alert. I threw 40K in, was it 250, whatever 250 shares was of end phase. So bought some end phase. Ooh, look at this after hours on American Airlines. What happened here? So what just happened here? This has got to be some kind of news here on American just came out. Hold on a second. Let's go to the term and figure it out. 1 second. All right, close. All right, here we go. Okay, let's see what's going on with the airlines here. Okay, yeah, for what it's worth, the only recovery play I have right now is a call option on Dave & Buster's. Literally everything else I have is not a recovery stock. Okay, so Delta, what just happened? Oh, was it Delta or American? Hold on. Oh, American. Okay, AAL. AAL. Let's see what happened here. American Airlines. Okay. Somebody says it's a glitch in the candle. Airline. Well, we just got an update 5 minutes ago. Airlines warn of dimming outlook amid Delta variant. Airlines for America. Okay, that's this. Okay. Oops. Okay. American Air presentation comment. American Airlines is holding extra cash as the market stays, quote, choppy. Airlines pair guidance as investors show relief. It's not worse. Delta variant could further hamper U.S. airline industry. Yeah. So this update just came out. Dow Jones, the Delta variant is derailing a rebound in air travel as COVID-19 cases rise, slowing new airline bookings and increasing cancellations. Airlines are cutting back on flight schedules. Some are warning of more financial losses in the months ahead, though executives said the setback will likely be short-lived. Airlines were on track for a fast recovery from the crisis that brought air travel to a standstill. Okay. Carriers now include Delta, Southwest, JetBlue, and American, saying business has slowed in business has slowed in August as customers grew alarmed by Delta. People are still traveling, but they're expecting a 90-day pause for that next leg up we're expecting to see, but it's coming. Okay. A 90-day pause in airlines. It's interesting. So it looks like that drop, by the way, was a glitch on American Airlines here, because now that big drop is not really showing up anymore. See, now American Airlines is up 0.1%. So that 5% drop appeared to have been some kind of glitch. Crypto sitting at 46.3, Cardano 2.5. We've got support.com down 3%. Momentum moving away here a little bit. Got one right, one wrong here on these options here. We'll see how these stabilize. I really want to see the earnings calls. When are the calls for these? I'll find out when the earnings calls are. Okay. Yeah, American Airlines for a moment dropped substantially, but it's back up. Okay. But it looked like it was just a glitch. Yeah, the Webull chart was off. Quad witching next week, just saying. Nice. More volatility then. Yeah, now's the time to buy a covered call on a firm. That is true. Absolutely. Yeah, the mandate from Biden. I'll do an update on that later, but basically it's all private businesses with 100 or more employees will be required to either mandate vaccinations or require weekly testing, which the tests are, ugh. That'll probably get a lot of folks vaccinated, but a lot of people won't like that either. Yeah, look, let's get a little bit more now on Affirm. So we talked about Dave & Buster's. The Affirm print was insane. I'm shocked because they missed on EPS as well, but that's the thing. With they did beat on revenue though. That's just the nature of earnings. That's why I usually don't play earnings. Okay, so what do we have here? Let me get their filing. Okay, here we go. It's gonna take another second here. So do you want to see? Okay, yeah, let's keep going over here. So this this hope over here on where was it? There was a little bit of hope they gave us on Amazon. That was the last search result. Okay, here we go. We talked about this. Okay, announcing in the next few quarters the revenue impact from Amazon. And here we go. Company's partnership with Amazon and Spotify. Debit plus card. Okay, yeah. These are all forward-looking statement disclosures. Okay, let's look at the numbers here because I've got a ton of shares of Affirm. Sorry to hear that, Julie. That's terrible. 40-year-old died from COVID. Jeez, that's horrible. So let's look at the numbers over here. So I'm personally very, very bullish on Affirm. I did hedge, and that's all right. But in terms of shares, this is great. We've got revenue here for the 3 months ended. Okay, I would like to see compared to last quarter, which again, they do this. Affirm earnings. So what you've got to do is get to investor relations, get to the quarterly results. Actually, I can just grab it here. And I want the last quarter, 2021. So let's look at this here. Earnings release right here. Let's compare right here. So in the first 3 months of 2021, they had 2.3 million in gross merchandise revenue. And now they had 2.5. So 2.5 versus 2.3, that's about an 8.6% bump. That's pretty good. That's good growth, despite the fact that Peloton suffered. They still did very well and had growth here. That's nice. Very good. Okay, good. We've got operating margin. What do we have here? Operating loss. Okay, well, we're spending money on something. So that doesn't help us compare. Active customers, 7.1 million. Here they had active customers of 5.4. Oh, wow. That's a nice bump. Transactions per active customer, 2.3 in Q1. Transactions per active customer here, 2.3. So stable transactions per active customer, and they added 1.7 million subscribers. That's a very good bump. That's why they did so well, folks. I mean, 1.7 into, well, actually, I should just do 7.1. The new number divided by the old number is our percentage. 31% bump in active users. That's really good. Oh, Affirm's doing, oh, that's so good. Affirm's really kicking butt here. Oh, my shares are going to be very, very happy tomorrow. Not my option contract, but my shares are going to be very happy. Active merchants, 29,000. Okay, and that is up from active merchants here of, oh my gosh, how did they do that? How did they go from active merchants of 11.5 thousand to 29,000? Oh my gosh, Affirm just killed it. That is amazing. I mean, yeah, you couldn't have expected this. That is so good. How am I reading that right? Active merchants went to 29K in Q2, and that's versus 11.5K in Q1. Wow. Allowance for credit losses. This should go down 5.2% for credit losses. Allowance for credit losses says, oh no, they actually bumped it a little bit. That's fine. That's actually even more conservative. Transactions per active customer flat. Okay. And then the active customer bump. That was big. What else? Key metrics. Yeah, let's look at the growth. Okay, this was at 2.5 gross merchandise volume. So that's billion. 2.5 billion versus 2.3. Yeah, okay, 2.5 to 3. 2.5 versus 2.3 in Q1 for. Okay. Wow, that's really good. Oh, John, that's awesome. Good for you. Yeah, Delta's still growing. Yeah, no kidding. Yeah, I'll probably dump both of my options that I have. Let's see here. Okay. What else do we have? We have, let's see here. I want to look into this a little bit more. This is really like, that's very, very good. Okay, Affirm's strong results this quarter demonstrate the progress we're making in a rapidly expanding network. Good. During the fourth quarter, we increased the number of merchants on our platform more than fivefold. Yeah, that's crazy. More than, well, I don't know about fivefold. It says active merchants almost 3x, but maybe they're talking about year over year. Okay, yeah, they're talking year over year. Yeah, they did have a crazy amount of a boost in merchants. Okay, active merchants we talked about. Transactions per active customer. How did they figure increased? I think that's year over year, because the transactions per active customer is stayed flat from the first quarter. So I don't know. I hate it when they kind of misdescribe some of these things by not comparing to the prior quarter, but okay. Company completed, or making it clear what they're comparing to. Okay, let's see here. Transaction revenue. Oh, these are forecasts here. Good forecasts. Gross merchandise. Whoa. Wow, that is an insane bump. Hold on a sec. Wait a minute. Fiscal year 2020, fiscal Q1. These are the forecasts for next quarter. So that's technically Q3 for the calendar. And they're expecting 2.5. Okay. Well, no, that's actually within range for that quarter. It's just the year is very incredible. Revenue 240 to 250. Transaction costs. Okay. So still expecting a loss. That's expected. I think a firm's expected to still lose money until 2023. That, I mean, look, from what I see here, this is great. Very, very good. And let's see how things are moving in after hours now. Oh my gosh, Affirm is up 22%. Oh my gosh, that is insane. Holy moly. Well, one of my bets paid off and one of them lost big. That's all right. That's the game of playing roulette. So that's really incredible. Good job, Affirm. Good job, Dave & Buster's. Both of these I had options on. Dave & Buster's I had a call on. Affirm, I've got lots of shares on those, so I'm going to have to do some cleanup tomorrow. But that was fun. I'm really impressed that Affirm's bumping this much. And it's really... It's the growth in merchants and customers. It's very, very good. And the fact that their transactions per active customer, hold on, let me confirm. Did that go up or stay down? Because did that go from 2.3 to 2? I think it may have. Transactions per active customer. Let's see here. No, it's flat at 2.3. Okay, yeah, that's good. Because 2.3 is exactly what we had at the beginning of the year as well. Nice. Nice job, Affirm. Okay. So next, let's see what else we got. Let's Let's see. Okay. Market's a weird place right now. Yeah, no kidding it is. Jobless claims, 18-month low. Well, that was yesterday. Okay, cool. So my expectation tomorrow is, I'm going to look at this here. I'm going to write down my expectation tomorrow as well. So I have an October 15th contract that's a covered call on a firm. And tomorrow's going to be a crappy day to try to get rid of this. And then I have a September 17th on a firm as well. And so Monday, part of me thinks Monday is probably going to be the day to get rid of these contracts. So both those contracts are going to be down a bit. I was already up well on the covered call, but that's going to flip now because that was a $100 covered call. And that had been doing well. So I could probably, I'm up 53% on that one. That one will probably be negative a little bit. Okay, so I'm probably going to be down about 10K on my call and probably on the put, probably down about 20K. So I'm probably going to be down about $30,000 in contracts. But that's okay because I'm up $107,000 on the shares. So the hedging I did on shares, cost me 30K. I'm still up 70 net. So even though I hedged, I'm still well up on my Affirm position. And that's because I really do believe in Affirm. I just thought this earnings would go different. And then that's why we call it roulette when you play earnings. This is also why I don't play earnings. So that closing these tomorrow is going to suck. So again, I'll probably wait until Monday to close my options. But I'll see how the day goes tomorrow, because if a firm kind of like bleeds out a little bit in the day, it could be just an opportunity to close those, move on. Okay, so that's a firm. And again, this is after hours movement. So we'll see what happens here. On Dave & Buster's, we'll see if Dave & Buster's runs tomorrow. If we get a green day in recovery and we get a run on Dave & Buster's, I'll probably close my call option on that one. So I have a call option on Dave & Buster's for next week. And that contract should be up substantially. That contract, did we run into the close at all? Let me see here. Oh, yeah, we did move a little bit into the close. Oh, that is interesting. That particular contract, I would expect, is going to be up somewhere around 10K tomorrow, maybe more. It was 30K. Could be up more. So net on my options play here, I'm going to be down probably about 20K on options that I played, but still up somewhere around 80K worth of shares because of the larger share investments that I had. All right, that's not so bad. So that's investing. That happens. All right. So I could also roll. That's true. I might consider that. Basically, the hedge you did, profit. Yeah, that's one way to look at it. Okay. Yeah, all right. So what else? Yeah, and it's possible, too, I could just roll my options out a little bit further and still maintain some of those credits on the sold contracts. We'll see. I'll decide something for tomorrow, but I'm not so worried about it since I have such an exposure to the actual shares. Okay, GVO rotating down a little bit, so potentially that movement. And remember, the earnings call happens at 2 p.m. for Affirm and Dave & Buster's, and that the earnings call for both of those could be a catalyst in both of those stocks. So we're going to pay attention to those. And whatever I end up doing with the options I have, obviously I'll be sending out alerts in the Stocks and Psychology of Money group, which, as always, you could use that coupon code down below. Price does go up over time. Usually goes up about $30 to $50 per time we increase the price. Gotta keep up with all that inflation, right? All right, Palantir's not really moving. Yeah, the two big movers here did very well in after hours. I'm personally shocked how well they both did. I've made that clear, though. Let's see. Peloton, flat in after hours. Matterport, flat in after hours. Not much other movement going on here. Let's look at Tesla for a moment. Tesla. All right. Tesla is down tiny little bit in the after hours, sitting at 754, dropping down a tiny little bit in after. Redfin's actually pushing a tiny bit in afters. Did buy a little end phase today as well. Let me go to Tesla. Where is it? How do we? I want to see how we finish the day with the Tesla news that came out. Tesla on finishing the day only finished the day up 0.13%. And it's giving up exactly that in the after hours right now. All right. Affirm was so funny when they missed and they first went down. That was funny. This right here when they missed EPS. But look at that run it had after that. Really incredible. So we'll see how that holds. It'll be interesting. After hours can be very, very funny. All right. So I do mention, yeah, any options I mention in the course. And I also put big disclaimers on, like if something's like, in my opinion, like a long hold or it's a short trade. Like, for example, with my contract on Affirm, here, I'll show you. With my contract, is this it? Oh, this is Matterport. Oh, this is when I bought Enphase. This is just the Matterport trade we talked about. Let me see. It's not worth pulling up right now. But, well, I mean, I could get it. Hold on, let me get it. Where is it? Oh, here it is. Oh, yeah. So I put, it's so funny what I wrote for Affirm because it's almost like I foreshadowed it on Affirm and I didn't listen to myself. Look at the intro. This is I wrote a lot more, but this is the intro of what I wrote. High risk short on earnings. You could literally lose 50 to 90% or more in less than 24 hours on Affirm. And this is because I fully hedged my downside on the 5K shares that I have. So again, I'm up with the shares that I have, but I hedged with a put. So like what happened here in after hours is a big win, but that particular hedge lost lots of money, kind of like the warning. And it's almost like the warning I gave, the way I was typing it, like this is just going to evaporate tomorrow. But yeah, so if you're wondering like the kinds of alerts I give, that's an example of that. Like with Hippo, or see with Hippo, I did a big disclosure in terms of why I was buying it and the spreadsheet and that the other options that we do. But anyway, so okay, what else? Affirm gave you whiplash, right? Yeah, no kidding. Go to metkevin.com/join or click the first link down below. All right, traded for 8 months, then set account under camp. Oh, that's interesting. Yeah, I don't know why. Oh, thank you for that. So, oh, thank you. I appreciate that, Lex Living. That's amazing. Thank you. But yes, so yeah, the answer there is yes. Yeah, body. It makes me wonder if body's gonna move. BODY on it's been a big dud. I only have like 7K in them. It's super small position relative to my portfolio. But I wonder if they'll move after the Peloton move today. Beachbody, no, they haven't really. So at 692, yeah, they are just a bleeder. But I also have gotten out of Peloton completely. Some people are like, Kevin, why did you change my mind? Well, I changed my mind because of the data changing. Search trends changing. I think we talked about this before. Search trends were changing. Delivery timeframes were changing. Prices were changing. Sales volume was changing. The trend was rotating to the downside. A lot of things were changing to the point where I just didn't want the exposure. And I moved into Hippo instead, which Hippo has done extremely well. Hippo's at 695 in the after hours right now. That's cray. That's a big one. I think I have more in Hippo than I have in Affirm right now. I do. That's crazy. I have 695K in stock in Hippo and 543,000 in stock in Affirm. Wow. I was really hoping to buy the Affirm dip today. I like this morning. I'm like, what if we could get like 79 on Affirm again? Didn't happen. Didn't happen. Oh well. So okay, Affirm is softening a little bit here in the after hours. Remember, we do have the earnings call coming up in 20 minutes. We're not going to cover the earnings call. The Hippo pick was fire. Thank you for that. Yeah, the Hippo one, that was a big oversold one. Like, I can't buy Affirm, in my opinion, at 109. Like, that doesn't make sense to me. Like, I'll wait for this to maybe fizzle down a little bit. I love Affirm long run, though. That's something that I do love about Affirm long run. All right, crypto's doing its little sideways trading. Support, Clover, Invite, Tesla. Okay, there's really nothing going on in after hours. Just quickly see if we have any news here. Biden sweeps federal. Yep, that was a big one. Large mandate. Okay. 20%. Okay, cool. Well, I think we did well here. Thank you so much, folks. As always, if you want, do I think Hippo's still a buy? Yeah, once it goes over 7, I think that's when we start getting a little stretchy. It could run, though. That's the thing about Hippo is, it's so oversold that it could definitely still have a run. But yeah, anyway. All right, so what was I going to say? Oh, yeah, check out the program's link down below. I do this weekend. I should finally be finalizing some new lectures. Remember, anytime I add lectures, you get them for free. Oh, look, the Affirm CEO. No way.
That serves consumers, that helps them feel safe and responsible about money while helping them buy things they need today and pay for them over time.
That full interview will be on Mad Money tonight at 6 p.m. For more on the numbers from Affirm, let's bring in Dan Dola from Zuho. Dan.
So it's finally revealed. They do well in advance pre-record Mad Money. I guess it makes sense. It just always feels like it's live when you're watching it.
Yeah, no, I mean, the results were amazing. I mean, it surprised us on the upside. And I think what's especially interesting on the results is you're seeing the average order value, right? Like the bull case on Affirm is that the average order value or the average ticket value will come down and be more of a kind of everyday ticket items, like everyday things that people are buying and not just big things like Peloton. And you're seeing that trend continues to come down. That's a huge positive. And of course, the most interesting thing is the Amazon deal is not included in the guide. So I think that's why the stock is up so much, because people are just seeing that and they're saying, hey, there's massive upside to the guide if the Amazon deal turns out to be as strong as we expected it to be.
Yeah, and to your point, they give numbers excluding Peloton because of those big purchases so that you can see what it looks like there with and without it. But because the Amazon number is not incorporated here, how much potentially is that deal worth to Affirm in your calculation?
Yeah, I mean, so we've done a lot of work on this. Thanks for asking. So we've actually done a survey about 2 weeks ago, right when they announced it, of 200 Amazon customers. And even if you take a huge haircut to like everything that the survey results said, 50% said they're likely or very likely to use it, and 22% said that they're very likely to use it. So even if you haircut this like times 50, 50, 50, you're still getting 20 to 30% potential upside to gross merchandise volume or GMV. And I think that's the massive upside of the deal. So the super conservative route still shows you 20 to 30% potential upside. And none of this is included.
The Amazon partnership, honestly, is literally the biggest thing for Affirm. I personally think you can ride Affirm as like an Amazon play. Like, that's why I put $500,000 into it. It's very, very exciting to me.
Question, Wolf. Like, and you see that they've actually said today that it's a non-exclusive deal with Amazon. You saw, for example, PayPal bought a company in Japan just yesterday, and they actually Amazon lets Paydi, which is a company that PayPal bought, advertise or use their service, the buy now pay later services on their website. So I think, look, I mean, there's still so much room to grow in buy now pay later that I don't see any risk of sort of any emerging credit crisis or credit risk in the near term. And the one thing, and we've talked about this before, and I think that's the most important thing, the algorithms that, you know, companies like Affirm have are way better than, you know, what we're used to when it comes to sort of FICO scores. So the way they underwrite their, you know, the people that take the loans, I think is the edge. It's those algorithms, it's understanding the customers, it's knowing what they're doing. That's what helps you reduce the risk. And that's what people don't understand.
The puts was a hedge because I thought that we wouldn't see this kind of bump until 2 or 3 quarters from now.
Competitors right now cropping up, or those that already exist in the buy now, pay later space. And I will admit, when these companies first came around, I thought, isn't this layaway? Is this really a big market? But clearly I wasn't right. There is a big market for it. In your calculations, what is the opportunity for buy now, pay later? I mean, how many transactions are being done this way, and how many could be done this way that all of these competitors are trying to get a piece of?
Right. So obviously this could be huge. I mean, the best way to look at it, and we've done work on this, you look at Australia, and Australia is kind of the market where buy now, pay later started for whatever reason. And that's a very similar market to ours because, you know, language and culture, et cetera. So it's a very good market to look at for comparison. In Australia, you're seeing double-digit penetration, I think, already of some of those buy now, pay later firms. Afterpay, I think there's a company called, you know, ZipPay, Sezzle. There's a lot of companies there. Afterpay is obviously the biggest one. And, you know, in that market, it's taking a bite into the credit volumes. And sort of the credit volumes are starting to kind of kink downwards. And that's because of buy now, pay later. It's not because of COVID. So I think, you know, at least double-digit penetration of credit volumes over time. You're talking about, you know, trillions of dollars of credit volume. So whatever penetration it is, it's still massive growth opportunity for buy now, pay later, just because the TAM is so big.
Why do you think that Amazon didn't do this on their own? And is there a risk, despite how attractive this deal is for a firm in the short term, that they'll learn how to do it, they'll pick up the knowledge, and in years to come, they'll just do it on their own?
Yeah, I thought about it a lot, and it's a really good question. So 2 reasons for that. One, I think Amazon is in the business of wanting to sell stuff. I mean, I know they're getting into other things.
Remember, they didn't do that with JP Morgan Chase for the Amazon credit card.
Dealing with, you know, underwriting of credit. And the second thing is, I do think that, you know, merchants are, and this is also something that ties back to some of the news that came yesterday on Amazon doing a point of sale service. And I think some of the payment stocks that we cover, like Square, were down on this news. So merchants don't want Amazon to know about them more than they already do. And I feel like it would almost be a deterrent to partner with different merchants and third party if they also start underwriting credit. So I think Amazon understands it, and they're trying to really maybe stay away from, you know, maybe making it look like they know too much about their merchants or their consumers, because that gets a lot of merchants, I guess, somewhat annoyed and scared of Amazon. So maybe that's another reason they didn't want to get into it.
Dan, thanks for joining us. It's up 18%. And don't forget Max Lepchin on Mad Money tonight with Jim Cramer, 6 p.m. Up next, Box's big battle. Starboard losing its fight with the cloud company over board seats. We'll discuss what the company's next move could be when we return.
Retirement income is complicated. As your broker, I've solved it.
That's great, Carl. But we need something better that's easily adjustable.
Has no penalties or advisory fee.
Sorry about that. I'll write this really quick. On my Affirm. Oh, sorry. There we go. All right, let's see what else we have. Okay, so now let's go back to, I was just looking through this right here. I was just going through the presentation here for Affirm and exploring this a little bit. I was really trying to find where, and maybe somebody else knows where this is. I was trying to find where they are basically breaking apart revenue per customer. See, we have transactions per customer at 2.3. We have active customers, and then we have gross merchandise volume, which they're doing the year-over-year comparison, but they don't actually show, revenue per transaction, or even gross merchandise revenue per transaction. Now, I do like this mix a lot. Look at how, I mean, people are financing everything. The right pie chart is that mix. So I do like that a lot. Okay, COVID's okay. Yeah, and that's kind of what I'm exploring right now, and it's really bothering me that this individual was talking about that. Maybe the earnings call will reveal that, but I don't see that anywhere in the documentation. So I don't know where they're referring to. I always try to fact check when I hear these people online yap about something. You know, they don't tell us how many I mean, maybe somewhere they tell us how many transactions they did, but I don't think they do. So if somebody has an answer to that, I'm going to check the chat here in a second. I'd love to know. But that bothers me because if I had that, know a little bit more. So anyway, that's kind of what I was just exploring here. But see, if I type in average, I don't get anything. If I type in transaction, these are forward-looking statement cautions. No. Transaction costs, revenue less transaction costs. These are millions. Yeah, we've already looked at all of these transaction costs. Nothing indicating how many less transaction on a per transaction sort of basis. Just all about transaction costs. Yeah. All right. So a firm earnings call in 10 minutes. Yeah. I'm gonna just read the transcript later today. I'm not gonna sit through the earnings call. I think they're too boring to listen to. Personally, so I just read them afterwards because then I can also highlight and take notes and stuff, and I'm not going to be trading the actual earnings call, so that doesn't matter so much to me. But I will try to get to the bottom, and I might do this with y'all here really quick because why not? Even if I go into the earnings release here, you know, if you type in average, you just get average shares. You do transactions. That's just transactions per customer. But there's really nothing that tells you how many transactions they did. No, it's a really good win for the company. Okay. So to finalize kind of my thoughts, just to make it very, very clear, I'm bullish on a firm. I did have a hedge put that cost me $30,000. I expect tomorrow that's going to be down about $20,000 because the stock ran insanely. My shares, however, just exploded, worth at least $100,000 of an explosion in the shares. So even though I lost about 20K on that option, I'm up 100K on the shares, which is great. So that's called hedging. You give up some money, but it gives you that downside protection. And I do have a covered call as well, so I have to get rid of that. That, though, has been up substantially. That's going to flip to neg. That's not that expensive, though. So that one's probably going to be down about 10K. So I'm probably down about 30K there. Net up $70,000 just on this earnings here, which is great because I'm much more long than I was covered. Then on my Dave & Buster's call, that I would expect with a 6% move here, it's probably going to be up like the call is going to be up, say 30% tomorrow or whatever. So somewhere around $10,000 is my guess. So this earnings little movement here cost me 30 grand, but made me 110. I'll take that any day. I'll take that any day. So I like that. All right. Thank y'all. I appreciate y'all being here. Am I going to pull attendees on it? I don't really want to sell out of my shares of a firm. I really like a firm. I might close my options tomorrow, though there's also a possibility that I'll keep them until next week and just kind of let this like insanity fizzle out a little bit. All right, folks. Thanks for being here. We'll see you in the next one. Good luck tomorrow. Let's get a Hippo to run again. See if it goes over 7 tomorrow. It's at 691 now. All right, folks. Check out the links down below. Get your free $70 or up to $70 with Public. If you want to get up to $250 with BlockFi, you could also do that by going to metkevin.com/BF. Get life insurance in as little as 5 minutes by going to metkevin.com/life.